is Observations with Otsu. Glad to be with you and share all this analysis on a Monday. It is very gloomy here. I hope it's much better weather with you are where you are at. I'm already fumbling my words. Market is looking pretty good. We're going to get into that. Also, you may have seen that the introduction was a little bit different for the video today. I have decided to add that in there at the beginning of all my main videos on YouTube and the larger ones on Twitter, because I talk very extensively about my Knowhere Premium Discord and my scripts, and I realize I think that takes up too much space, takes about 10 minutes or so on every video, so I'm just going to put them up front. And part of that also too is thinking over the holidays and things like that. I've been in discussion with a lot of projects, and you know when you get to a certain stage, and I'm trying to I'm trying to approach this as humbly as possible. Like you start to get approached for things like sponsors, and things like that, and for better or worse, I've had much difficulty working with projects to try to do that, and for most of it is a result of I cannot seem to agree with projects and things like that about how to sponsor or how to partner, I should say. Most of the time, kind of broad stroking this, I should say, most of the time they want a lot of things for basically nothing. And when I say nothing, not, it's not that I need the money per se or nothing like that, but a lot of times is just share this link and you get like I will get a trading discount or something like that. Something very basic, not even that. And I've dealt with a lot of people, a lot of projects over the years discussing that, and most of the time it's just a wash. It doesn't benefit me. It doesn't benefit you either because I'm shilling you a project that you don't even care about, things like that. Excuse me. So most of the time I try to. Anyway, long story short, I can't really focus on the right type of clientele to sponsor or partner with. So the result I thought about over the holidays is, well, I have my own services. I will just do that. Okay, so as we go into the first observations video in 2024, I'm pleased to share with you that I am not going to take sponsors for the time being, or really at all. I don't really plan to. And instead, if you want to support me, these are ways to do it. Okay, I've got a Knowhere Discord group. It's free to join. You're welcome to join that. I have a premium group, which you just maybe have seen at the first part of this video. That is a paid thing, but it does help support me directly. It helps to allow me to do deep analysis and to share it with you all. I already have a pretty decent group already after the first month and a half, doing very well. In addition to that, there's the scripts, and so those are another way to support me, and also a way to support you in general. Like these things here are actually are to help you. Um, and then if you decide you want to do that, that goes directly to me. It doesn't go to a project that I don't care about. It goes to things that I've done myself. I do the premium group completely by myself. I coded the scripts myself. I have not outsourced those. I have done them pretty much all by myself. I've tested them over different assets and cycles and things like that. So this is all homegrown, for the most. I don't want to say 100% per se. I don't know offhand, but I've done these. They got my brand on it, my name, my reputation, and then it also comes with my support as well if you decide to take a look at those. So anyway, that's probably going to be the last big discussion about that for the time being because I'm going to have the intro probably on every video. And again, I thank you for supporting me, for all those that have already bought these services. And, the group's going well, the scripts are going well. And like I said, this does help support me directly to continue to support in free areas as well. So if you enjoy my content, take a look at it. Yeah, otherwise we can just continue on with the charts and with observations today. As I said, I'm glad you're here. We have a lot to discuss. We got the ETF approval news. Is that happening? Is it not? think we're 99.99% sure that it's going to be approved. We had Gary Gensler talk today that caused a shift in the markets, and that's one reason why it's green today. Is because the ETF news is almost all but guaranteed. We'll take a look at that, and then we'll also take a look at what that means for trading. Like, can we trade this right now? Because if you are familiar with my Discord, if you're in there, you understand that I've been a little hesitant to trade right now. And why is that? Because the market looks pretty freaking good, right? Otsu, why are you telling me not to trade right now when I could have made a lot of money yesterday? We'll get into that. It's not what it seems like. Um, and also, there's other elements at play. We'll get into all of that. And so we'll take a look at this from a news kind of reaction standpoint, and then we'll look at this from a trading application standpoint, looking at the short term, the long term, and everything in between. And so, and then as usual, we're going to do weekly top down analysis for Bitcoin, Ethereum, and Solana. Probably going to be a shorter video today. I got a very busy day or very busy week this week, and so we'll just get started, get with the ETF news, application of the trading, and then the analysis for the top three. So first things first, I want to talk about the ETF news, and I got Gary Gensler here on. Well, at first I have him on the thumbnail, but I also have him here up on the screen because a lot of people are kind of saying, "All right, the ETF is going to get approved." I think everybody pretty much knows that it is, but this thread here came out very suspiciously. I shouldn't say suspicious. I don't mean suspicious as a bad thing. I mean like not coincidentally, in my opinion. And so I'll just kind of read what it says, and then we'll kind of read what people are kind of reading into it as. And I'm just here kind of sharing the news. I'm not here to kind of just say one way or the other. But basically, he wrote a thread, some things to keep in mind when considering investing in crypto assets, and it kind of goes down the list of what this is. Now, a lot of people are interpreting this as saying, all right, he knows that this is going to be approved. So there's some things you need to keep in mind as we approve this as a nation. And I don't, like, obviously he didn't say that, but I think a lot of people are implying that. And I think that's a fair, I think that's a fair assumption because there's a lot of resistance for crypto being accepted here in the United States and with the ETF approval, things like that. And so I think that bears in mind. So it's funny because there's 22 million views, and so he's probably going to get paid off of that from X. But the funny thing is that 940. So we take a look at that, and if you want to look broadly within this range, it's roughly right around here. That was roughly around the announcement. It was actually more towards around this section right here. As you can see, we've pumped pretty significantly since then. And if we do on a date range from top to bottom, it's about four. It was already up a couple percent, but that seems like that was what was played into that, I should say. So, and so that's kind of what we're looking at. So again, did he cause the pump? Probably. I think it's safe to say that he probably did. And that's pretty much all that's there for the tweet with him. Um, but I think it bears in mind that a lot of people are on edge with this. And recently, I might just switch to the 4 hour here. Recently, we've had a lot of price movements because of ETF approval or denial or everything in between. And I honestly, for the past 3 months, a lot of people have kind of presumed the ETF would be approved. It's something that we've known for a long time. Honestly, as way back as 2 years even. But I think more relative to now, the current news is maybe 6 months or less. And a lot of people are trying to say, well, this is one reason prices are going higher because of this. And, I was even one of those people towards the end that said, hey, I think this is going to be a sell the news event because people are anticipating that. Now, that being said, you guys know I was a very big proponent of a person to buy Bitcoin under 20,000. I was very vocal. You guys know that I was, and so I don't want to get into that. Um, but that was right after the FTX fallout, and that was not during ETF discussion. And so it's one of those things is like, did the ETF news help bring Bitcoin from 20,000 to 47,000? I mean, kind of, maybe. I think you could make a small case. I think you could even make a moderate case in the past month, but I don't think you could make a case for the last 16 months. Or yeah, yeah. Yeah, roughly about 12 to 16 months, I should say. And I know that because I was there in November of 2022 saying to buy at 16.8. There was no discussion about ETF news. And so, I mean, we could have arguments about that, but I'm pretty sold on the fact that that was, ETF news was after it. And so a lot of times what you'll see is does the news play into the market price actions? Many times yes, and sometimes no. And that's where it's a long discussion. I've had several videos about this beforehand. You can check my observations videos. We're on episode 52. Okay, I've done one per week for over a year now. And so you can go ahead and verify and backtrack where I was talking about buying and selling in the ETF news, where that came about, time. You can cross reference all of that. So I'm not going to get into that. But I will say that a lot of people want to put things hand in hand, and that's exactly where we get messed up as a whole about reacting too much to news. I know this because a lot of people were concerned about the CFTC meetings and things like that, and a lot of people were panicking. The same people that are panicking, that were panicking now, are like praising the charts, or a lot of people that were panicking back then are praising the charts now, and it's very silly. Okay, first of all, and another thing too is, this is one reason why I'm not too concerned about news-based price action right now is because I'm already like my bags have been packed for a long time, and they're pretty much in storage. It's like figuratively speaking, because you know a few percentage points doesn't affect me either way. And so that's one thing that I think you also need to keep in mind when you're trading is that's why every step matters, because you do not want to be in a point where you're panicking consistently over and over and over again. Because if you misstep, like it's important to get that one step correct, like find out where the direction is, find out, what heavy positions you want to buy in, because that will save you some time later. And so that's one reason why people, really easy an example. That's one reason why people save, because you're saving literally for a rainy day, like it is here. If you save up, then you don't have to be concerned about, every little thing. Like if you've never, like there's plenty of times where I've worked paycheck to paycheck, and not even paycheck to paycheck. Like I was broke like a week before payday, right? And so I've done that for probably 15 years. Okay, and so as I got into crypto, I actually got out of that, and so now I don't live paycheck to paycheck, and I haven't for about 3 to 4 years now. And so there is a difference, because this does go into personal finance just a little bit, but there is a big difference living paycheck to paycheck than not having to. Like once you have a year's worth of savings, or enough for emergencies, or whatever that is for you, right? Like you start to understand, like, okay, I don't have to do this. Okay. And many times it's actually more expensive to live poor than it is to be, have some money. Not even to be rich, just have a little bit of extra. One of the biggest examples I share very often is car insurance. Here, or the state that I live in, you have the option to either pay month to month, or you get a discount if you pay every 6 months. You don't get the option to pay every year. And so if you pay in a one lump sum, you get like 15% off. It's crazy. And so I think it might even be closer to 20. And so I've been making that full payment for almost 2 years now, because it is worth that extra. Like, why wouldn't I? I have the money to spare to pay for that, and then I don't got to worry about making a payment for 6 months. And I would probably pay more if I was able to. But that's the thing. Like, for example, like your payments might be $200 a month every month for 12 months, or let's just say 100 to make the math easier. So that's like $1,200. But if you paid that in lump sum, it might only be 800 or 900. So you're saving for $300 to $400. And so that's where that stuff kind of adds up. You don't have to, you don't have to spend the extra money. You could buy in bulk. You can do this. You can do that. And like, I know this is going way off the trail, but like, like luxury items, for example, that's a big discussion when people get a lot of money. And so, I've been very adamant. Like, I only buy select ones. Like, I don't buy the Gucci. I don't buy that the the Dior, things like that. Like I only buy them if they make sense. And I have bought a few luxury items, but only because they're high quality, not because of the brand, but because they're worth it. And so sometimes, like I've one thing that I buy regularly, not regularly, but like enough to say I do that more is buying a good pair of pants or clothes because you can buy luxury brand clothes that if the quality is good, actually are a better deal than buying at Walmart, Target, wherever. Okay, and that's one thing that's one thing that I look at. Now, shirts, if I'm at home and I'm not going anywhere, I wear a $5 t-shirt. Like I'm wearing an $8 t-shirt right now. Or under 10 or whatever. So I'm not afraid to buy cheap by any means because it also helps you save. But I'm also not afraid to buy high quality clothes that you pay a decent amount of money for because they are worth it in the long run. So that's the thing. And so I went on a big rabbit trail there. But the point is that everything that you do matters. So going back to the trading world, everything matters. Okay, every green candle, every red candle, but also every position that you take. And that's one reason why I've been telling people not to trade this for the past few days is it isn't because you can't make money, okay? And I'm getting ready to talk in my premium group, and I won't say too much because I have to keep it private. But there's a section where we do a video every 2 weeks. We do a video every day actually, but we do a private long video every 2 weeks. They get to come up with the topic, and then I discuss that topic, and it's kind of like a it's like an educational kind of thing most of the time. So um, one of the many we got a big theme that we're going to talk about is portfolio management, and that's going to be 2 videos long. And one section of that is going to be about the benefit of missing out on purpose. And that's something that I think a lot of people don't understand. It's something that I've done myself for 3 or 4 years now. And I think that that is honestly crucial for the health of your portfolio, that it is okay to miss out on purpose. And one of the bases for that is that you can always find another trade. Okay, there's always going to be another trade. I could give you 100 trades right now. I can give you 100 trades at any given hour of the markets at any time. Okay, so if you succumb to that idea that, hey, because there are 100 trades at every hour, I'm going to make 100 trades an hour, you're going to exhaust yourself. You're going to lose, you know, aspects of the trading. You're going to start going crazy. You won't be able to sleep. Okay, you're going to probably lose more money. You could gain more money, of course. Not to say that you couldn't lose, but the most important thing is you're going to not have a good of an edge. Okay, it's I only want to trade where I have an edge. Okay, and the past couple days I haven't had an edge. I'll be completely honest with you. Everybody has an edge that is good. And I'm not saying I'm good by any means. I'm just saying like everybody should have an edge. If you do have an edge, that means there are times where you don't, and that's completely okay. Having an edge is conditional, and not every condition bears a trade. So for example, let's say, another example, like a lot of people like nice summer weather. Okay, well right now it's gloomy. For me, the summer weather is only during like June to August. Okay, and we're in January. Okay, so it's the opposite. So like I'm not gonna go wear shorts outside right now because it's 20 degrees Fahrenheit. Um, or what, 30 or whatever it is. It's not snowing, it's raining, so it's probably 30 or 35. But you see what I'm saying, right? Like I'm not gonna get my snow boots out when it's 90 degrees. Okay, I'm not gonna turn on my four-wheel drive on my car when it's on a flat road and it's sunny out or whatever. See what I'm saying? Like there's a condition, there's an edge for everything. So just understand that it is okay to miss out, not because you're not going to make money from it, but because you will save, um, you know, energy. Basically, you will save money. Like, first of all, you're not putting your money at risk, and so yes, you could make money, but you could lose money. So your money is no longer at risk, but you also get to take a break, and that's part of having that solace. And I have an article, The Solace of Missing Out on Trades. And it's important because it helps you to clear your mind, helps you to assess, well, okay, this happened. Why did it happen? How can I capitalize on it either the next time or as a result of this happening now? And so that's one thing, like, things can pump up like they did today, but some of these are bearish retests, which we'll probably get into. Some of these are not, like Bitcoin. This is looking pretty solid, so we can kind of adjust for that. See what I'm saying? It doesn't always have to be, you don't always have to be at risk in the zone because you could even miss out on events like Christmas. A lot of you guys traded during Christmas, I bet you, and I didn't. Okay, could I have made money? Maybe, but it's just not worth it all the time. See what I'm saying? So that's how that plays out. But as far as like trading the ETF news, don't I wouldn't necessarily be concerned that you're missing out here, because you need to analyze a few different things. One, we don't know if this is going to go up or down the next. Like we keep saying this, like yes, it's going to be a bullish thing overall long term, but short term, we don't necessarily know. Okay, and this pump was a good sign that it went up. There was breakdowns. I mean, what was it? 5 days ago, we were crying about this. Like I literally made a video about this, that we went down to 40,000. So we've gone up almost 10,000 in one day. Like coins like Solana went down to $78 and now they're at 97. So we'll take a look at Solana in a second. But it breeds volatility, which also breeds uncertainty. And the thing is like you just need to be careful about this. I'm not telling people not to trade. I'm giving my personal assessment. I'm not personally making any trades right now, but part of that is because I bought in under 20,000. For Solana, I bought in at 19. Okay, so I'm not afraid just to sit here and just get some popcorn and watch the charts. Now for you, it just depends on your risk. I would take a look at things and see, well, how much money did you make over the past 12 months? If you didn't get in, I would be more concerned about how to process the past 12 months, about why you didn't get in or what was the reasons, and there's various things. And I'm not even saying that that's bad, but I would much rather you try to reflect, especially as we go to the new year, a little cliche, I know, but reflect on how you assessed the past year and how much performance that you did with that relative to now. If you're rushing to try to buy in right now, I think that's a terribly bad strategy. It's high risk, insanely high risk, especially now that we've just pumped 7%. And so you can kind of take a look at here that we pumped up significantly in a short period of time. But anyway, just understand that you are not trading good conditions right now, in my opinion. You could be trading profitable conditions. I do agree with that. But I don't know if trading, I don't know if that's the best mindset to take right now. But we'll see how this plays out. It could go up immediately, could go down. I've got a feeling it's going to go up still. I don't have any problems with that, but just understand the trading environment that you're in. The best time to trade was 6 to 12 months ago. It's not now, because even if let's just say we go to all time high, right? We know where all time high is. 69,000 basically. If we go to 69,000, that is 45%. So let's just round it up to 50%. Like you've had more opportunities in the past 12 months to make 50% than now. Okay? So is this a guarantee? I think it's possible to say that, but the problem is I don't know if I would say that over a short period. I mean I'll never say that because that borders on financial advice. But the thing is, will Bitcoin go above its all-time high the next 12 months? I think most of us will reasonably think so, especially with the ETF news bringing new money to the table. Now, it could be most of that will be non-collateralized, so there's other issues with that. So it could overextend. It could go higher. Could go up to 300,000 perhaps. That's another discussion. But just keep in mind the nature of this is going to be more volatile, and so keep just know the risks. I guess that's what I should say. Know the risk while you trade this. So, all right. So that's pretty much the theme and the introduction to all that stuff. Now we're going to get into Bitcoin analysis, Ethereum, and Solana. All right, going on to Bitcoin first. This is the weekly time frame. We're up about 7% already today. And so this is actually one of the few instances where we start on Monday on the upside. Very interesting to take a look at. And so currently the Aroon's at 100%, which is good. That's what we want. Bulls are at 7%. So this is ideally best case scenario for where we are at, considering the ETF news. There's no real surprise, but it's also a good scenario. It's not, we are not necessarily in danger to go straight down like a blow off top scenario kind of thing. But it's overall very healthy still. I mean, we do have a divergence, so that is something to keep in mind. But again, the weekly has just started. And that's one of those things to keep in mind. Like, if we get a divergence, and like if we actually, this breeds a very interesting scenario because if we close, we have 6 days left to go. So keep that in mind. We all know that, right? If we close right now, despite 6 days left, we have a divergence, and then there is some concern for that. But if we were to pump with the ETF news, and let's say we go to like 56%, that's going to invalidate the divergence because it's actually going to be above the current zone. So keep that in mind. That is also why I only look at divergences at daily at closing candles because it can change. It can change very drastically. Now, have we had a divergence before? I think we had one right here, um, but I don't know if that is or not. I probably shouldn't have said that, but um, I don't think so. I don't know. That's too close to call right now on a video. So um, keep that in mind. We still have 6 days to go. That still could invalidate. Another thing that we have is we have this zone right here. Here's your closing candle zone. We are currently above that. So that's something to keep in mind. But if you count the wicks, we are not above that. And so we also need to keep that in mind. We're in kind of a weird zone right now, and that's to me that also breeds more uncertainty as we go into volatile markets. I mean, you can argue with me about the volatility and whether we shouldn't trade. You can argue with me about whether we shouldn't trade or not, but I think it's hard to argue that things are more volatile. Like 7 days ago, we were screaming scam dump, and I was one of those people. People traded. The markets went down 20 to 30% within an hour because the ETF was quote unquote rejected by some people, and that ended up being false news. It was bad reporting. I have a video that's still up about the bad reporting. Now, because of the Gary Gensler thing, now we're up 10%. And to me, it seems like there's more stronger reaction to the downside so far. So that just keeps. Anyway, it's very volatile over the course of the short period of time. And so we'll take this step by step. That being said, I'm going to still focus on technical analysis. This is why I've always said go to TA first. Because yes, the news might have some short term, issues with that, but by and large, the long term focus TA will win out over time. So just keep an eye on that. So anyway, we're in that kind of zone right here. Aroon looks healthy. Divergence is concerning, but not nowhere near the close at the moment. And we'll see how that goes. I mean, could we go up 50% because of ETF approval? We'll see. I don't think so, but we'll see how that goes. We'll see where it lands. I think the best thing that people can do is speculate where the price is going to be. And I haven't been exactly the most focused on the ETF, but those things really kind of bother me because I don't rely on news. I rely on TA. So when you have something like this, which is probably the best news catalyst in a long time, I would say even bigger than FTX, in many ways. So it gets confusing, and that's why I tend to lean to just let the dust settle and see what it goes. I would love just to get this approved and done with, to be honest with you. So that's pretty much the weekly. There's not really much else to discuss here. Um, going on our second bullish candle, if we close bullishly, which we probably will. Going on to the daily. Now, the daily, that's something that I looked at here. And so we had a few things. First of all, I had this channel. Actually, it was kind of like a wedge channel. Like, so we broke above that, right? And so a few things here, a couple things that I like, a couple things I don't like. So I mentioned this in Discord. So I mentioned part of this on Twitter, but we had a triple cross on the Aroon, which we don't normally have. We've never had it this quickly. Never. In the history of, um, sorry, in the history of price action, I've never seen it this quick. In fact, you can't make it any quicker. 3 days. So within 3 days, we crossed, we flipped bearish, then we flipped bullish, then we flipped bearish again. And so the bearish one was the scam dump. And so actually we flipped again bullishly from the Gary Gensler thing. So that it's a little confusing. Overall that's bullish. But it's also a sign that the market is uncertain about the direction, and the market's very sensitive to this direction. RSI is still looking pretty good. If we kind of zoom up, and so a secret to this is if we go zoom up to like maybe the 3 day, we can see that things are still bullish. So short term on the daily's not short term, but like short term, quote unquote, things are uncertain. But overall, the market's still very bullish. Still very bullish. No reason to kind of freak out necessarily. So just to be cautious in some ways. But this is looking pretty good. And so that's the good news. The bad news is that we have a bullish breaker right here. And so that happens when you have price action inside the bigger bar. And so it goes above. And so what tends to happen, again, I've mentioned this before, is 95% of the time we come back down. And so if we come back down, we usually retest the inside of that bar. So it'll be somewhere between here. And so this is the inside of the bar that didn't get touched from the gap. And so this is the range I'm looking at. Low side of 44,000, upside of 44.9 or 45,000, I should say. So nothing significantly bad. The problem is that if we all of a sudden retreat another 6% downward, people are going to start freaking out, which is going to cause people to more start freaking out. Maybe we'll go even lower. So there's problem. That's why I'm mentioning this volatility is not something I prefer. It all it does is breed bad environments and cause people to rely much more on emotions than everything else. And so I don't like it at all, honestly. But that being said, we do have the bullish breaker. That does not mean it's going to retest right away either. And so what we could do is we could run up from this candle and continue to go up. It's completely possible and normal and sometimes even expected. But we've had a pretty good rally so far in 1 year. And so we'll see how this goes. I think the ETF news, as much as I've been kind of harsh on it, shouldn't be talked down upon. Like, it's a pretty good bullish catalyst, very very bullish, in fact. And you can look back and see, like, well, all the negativity towards crypto was probably just so that they can get things done their way. And I don't want to get into that in this video, but that's for the daily. However, this is kind of what I see. Now, for a long position, you could long this. I wouldn't. The thing about bullish breakers is I don't like them because they tend to come back relatively quickly in a short period of time. That being said, you can long this. You could do something like so, your entry at the close. You could target your 55, 60,000, whatever you want to do. If you want to add on, you could add on, things like that. And so that's kind of what you could go from there. 27% at 3.3. I think that's perfectly fine. But as far as a catalyst, I think it's good. Um, that's pretty much it for Bitcoin. See, it's tough because, again, I know I'm going back in circles, but the ETF news kind of just over it just covers everything right now. And so, like I said, I would like it to get um, done and over with. Now, let's go ahead. Actually, I kind of want to go to the shorter time frames just for a second. And so, I've been kind of taking a look at this, and you could trade this um, in many ways. I don't really cover lower time frames on observations, but you could see something like this, where you had kind of a trend line break, a continuation pattern. You don't want this to come back inside. That's not good. That's like a mini fake out. So keep that in mind. And then you have this consolidation marker right here that you could use for a retest point. So you got those things overall. So keep that in mind. You could, you know, because of the volatility, and see, I hate saying this actually, but let's say, you had, let's see, moving average. Let's just use smooth moving average. So this is just an example. You could use a smoothing moving average to take advantage of the buys and sells. That's completely possible to do. And so I kind of readjusted this off screen. This is the 50, so you could kind of rely on the 50 a little bit, give you a little bit of an easy route. So I do have a video called Trading Bullish Price Action, and that's a 6 month old video, I think, but it still goes, it's still applicable to now. So it especially works in higher volatility markets. So keep in mind that does equate to a higher risk, but that is there for you if you decide to use it. But you got, you could play this here. So for example, you got your trend line break here. I know that was the Gensler thing, but that works out. You could use that to your advantage if you decide to do so. So anyway, that's Bitcoin. Going on to Ethereum. All right, Ethereum on the weekly been sluggish overall compared to a lot of other coins. We've had this marked out for quite some time. Um, that was the Adam and Eve, deviation pump afterwards, and so now we almost have kind of like a cup and handle scenario. Um, but hasn't really had the performance that we wanted to, relative to a lot of other coins. And so, in addition, you also have this fib zone that starts at about 24,000, 2,500. And so that we're kind of hovering below that right now. So other than that, there's not really much to say. There's no divergence here. We have a wider bearish consolidation right here, very wide, in fact, and that's not overly a good thing. So like, look at this here compared to, Bitcoin, which is bull. Like it can't get any more bullish on the Aroon. Like it's printing max bullishness on the weekly, where Ethereum is like close to. It is going down, like the Aroon is up, but you got the consolidation forming instead of the trend, which is a moderately bearish thing as far as price action. And that doesn't mean we're going to go down. That just means, well, the strength could be lower. I mean, that's probably one reason why the ETH BTC chart doesn't look very healthy. And so, Solana's also doing the same thing. And even some coins like XRP isn't doing good in that regard. But you can see like Bitcoin is the only one that's really doing outstanding in that scenario. So anyway, that going back to Ethereum, that's kind of what we see. We're still below a zone of 2,500, unlike Bitcoin. I mean, we are approaching a zone right here at about 47, or I should say, no, sorry, 48.5. And so we are approaching territories that are causes of concern, for me. But with Ethereum, we haven't entered that. We still have a lot of ways to go. And so I really don't think Ethereum is going to be, I've said this for a couple months now. I don't think Ethereum is going to be very strong compared to other assets. I think Solana is a way better asset in terms of money making. Okay, I'm not saying it's better infrastructure wise, but I think the potential to make more money is much higher there on on Solana and the Solana tokens. And so I do cover Solana tokens in Discord Premium. And so anyway, that's pretty much it on the weekly. Yeah, pretty lackluster. It's still doing okay. Here's what that looks like on the daily. So we have just a very, very weird consolidation marker. I don't really like this. This is too choppy for me, and it's a clear sign that Ethereum is not leading in the markets. It is reacting to other assets in the market, and so with that, I don't understand why anybody would want to trade Ethereum versus coins like Bitcoin, which is up 2% higher than Ethereum, or Solana that's up 3% higher. There's a lot of other coins that are much more beneficial. You go down the line here, KDA is I don't never hear anything about KDA, and it's been doing pretty well. Not recently in the past 2 weeks, but relative to other things, it's been doing okay. So, you know, yeah, I don't understand. You got coins like Woo and Bonk and things like that. So, it's worth Ethereum. Just I don't does it just seems a little lagging overall, and the sign that this is just consolidating back and forth. Like you can see a sharp down move, sharp up move, sharp up move, sharp down, sharp up. So that's a sign of just reactionary secondary. It's a it almost is like a secondary asset, and I hate saying that because I like Ethereum. Um, but it could be one of those things like it's a good chain that's done a lot of good projects, but it's almost like a dog chasing a car. The car has stopped, so why would the dog chase it anymore? Ethereum has matured, and so maybe it's going to slow down a little bit. I don't know, but so far market looks good, despite it not being as potentially more profitable. Here's what I would look at overall. I would just play the range of this. You could long this. The problem is that you're going into a resistance zone. So I think it might actually just be better if you just wait to get above 25,000, target back in the range, do something like that for your entry and your stop loss, and then you could target something like so. The problem is again the R value just isn't there. Like 2.3 is disappointingly low for me. Um, I have some Ethereum at 1,500, and that's about it. I haven't really relied very much profitability wise on Ethereum, so that's pretty much all I see. I don't know if I would wait for a break of this. I think I would wait for 25, and so we do have a bullish Aroon consolidation here. Flip of the 50 looks okay, but not where I would want it to be. So all right, that's Ethereum. Going on to Solana. All right, going on to Solana, we're going to cover the weekly first. We have some trend lines here. We're going to get rid of those. And so I mentioned a couple weeks ago that this was a little bit concerning here at the top. I guess the good thing in hindsight is that we closed lower. I mean, yeah, the rejection was high, but we closed, basically $10 where we're at now. So that's not as terrible as I initially thought it was 2 weeks ago. But still a little bit concerning. But I mean, on the weekly, it still looks okay. We do have a hidden bull div, so that means we probably are going to lead more towards chop reaccumulation instead of a big drop down. So that's the good news. Bad news is that we have a very wide Aroon bearish consolidation. We need to flip this up to a new high to get this to pretty much go away, so to speak. And that's going to be hard to do because we need to make 126 to do that. So it doesn't look as bad as candle closes, and that's why I say, like, do I think this is bearish? Not necessarily. Do I think that this is bullish? Not necessarily either, because I think this is going to lead more towards a longer chop than usual, and that could be anticipation with Bitcoin going, with Bitcoin and the ETF news and ETH as well. I think those two are going to take more of the limelight, and they should. I think that that's healthy for the market anyway. So, and that's pretty typical, before a longer term rally like we are expecting. Um, typically Bitcoin does take over for about 2 months or so. So here's your marker right here. Basically from see if I can going from wick to wick. So we did kind of break above that. Not quite a deviation, just depends on how you want to view that. I think, does this really affect it? Not really. Actually, it makes it worse. So we'll kind of go back to normal. So this one, I like this because it matches up well with the bottom here, and that's also a bullish breaker. So we could visit back down there. That's been a concern of mine that we would visit $78. But so far we're still a ways away from that. I would be much more comfortable discussing bullish price action if we made it above the mid at 109, or just probably just 110 to be honest with you. And so that's pretty much it for the weekly. Got a long ways to go with this. I don't really like the setup because we were at an all time high in the RSI a couple weeks ago. I don't think that that's easily going to be something that we bypass. So don't be upset that we might stay within the 75 to $140 range longer than like 2 months, possibly even 3 months. So don't be. I'm not saying that will happen. I'm saying that I think you should prepare for that as a larger possibility than other assets. And so that's the thing. Honestly, if you take away the ETF news, you take away Bitcoin, like the market doesn't really look that good to me. I mean, it still looks good, but it looks way overextended relative to where things have gone recently. So just keep that in mind. Going on to the daily, you had your drop down, you had your retest. Now you're kind of going back above with a bounce. Got the bullish wedge working out. You have a reclaim of the 50, so that's looking all pretty good. But this is really hard to analyze. The only thing that really makes good sense here on the daily is that trend line you saw earlier. You had the bounce above that, so that's looking pretty good. That being said, I mean, we're still above this. You know, we had the breakdown, pump up, deviated to a new local low, and now we're pumping right back into that range. So I'm not happy with this because this is about where you'd want this to stop if you were a bear. And so this needs to flip. We need to hold above. We really need to hold triple digits. That's the thing. That would be a start to get this going again. Is that we would go triple digits on Solana, and I'd feel much more comfortable. 110 especially, but at least 100 to give us something. Now, going on to the 4 hour, we did have a wedge in play. And so it was one of those things where this was the wedge, and I talked about this yesterday. We actually pumped back above it, so now that's relatively okay. That's kind of a spring scenario. And so I do like this as a potential long idea. And so a little bit risky because you are kind of going away down towards the spring again. But this is something like so. Looks okay. 2.5 is about my minimum for R value at 30%. So that doesn't look too bad. Had the bullish high cross, so that looks okay as well. Flip of the 50 also looks okay. So it doesn't look too bad. And so that's pretty much it for the 4 hour as well. It's complicated, and so but those are some long ideas to kind of supplement the price action that we have. So anyway, that's the video for today. Again, summary. Gary Gensler kind of helped prop up the pumponomics today, and I guess we appreciate that. But overall, um, keep in mind that I think the ETF news will bring a lot of volatility. I think a lot of you guys um, are not equipped to trade this, honestly, and I'm not. I'm not even comfortable trading this, and so I think if you, I would assess your own portfolio, look at your situation, and say like, is it worth is it worth the risk right now? Because nothing is going to hurt worse if you lose money right now when the market's just rallying super hard. Okay, um, it is. I know people that have lost all their money from this scam dump. Okay, um, and that's one reason I don't care for that is because I know people will lose money out of that. Um, so just keeping that in mind, like I personally am leaning to not trading right now. I don't think the conditions are ripe for trading. I think the right conditions are ripe for celebrating and just holding. Okay. Because this is something that has been going on for quite some time. The ETF news doesn't mean anything to me either. Like, who cares if Wall Street approves this? Like, I've already been trading Bitcoin myself for years, for 7 years now. And so, why do I need Wall Street approval, right? I've been trading Bitcoin for half of its life. Okay, so um, it's Bitcoin is my baby, not theirs, so to speak. So just keep that in mind overall. I think the conditions will be much easier to trade after the news has been approved. It will more than likely definitely be approved by the end of this month at the most. Then we can get back to regular scheduled programming. Until then, just know the risks, know where you're at, and don't sell yourself short either because like let's say you only quote unquote only doubled your money last year. That's still pretty freaking good. Okay, that's double the S&P for last year. And 50% is still pretty good too. Don't be embarrassed to say those kind of numbers because a lot of like CT has a bad reputation as far as like if you haven't 100x in a month, then you're just a terrible person. Like no, that's wrong. Like my whole portfolio is up maybe like 600% last year, which is probably my best year ever. Okay, so keep that in mind. Like those situations, um, that would be considered okay compared to CT standards. Not even that great, but I disagree strongly. That's very, very, very good relative to everything else going on in the world. That is like if I was able to get 600% on the regular in Wall Street, I would have like a star on the sidewalk kind of thing. See what I'm saying? So just keep that in mind. Just don't sell yourself short by trying to sell yourself too much, so to speak. Anyway, know the risk, but with the summary, Bitcoin got the breaker, got the all-time high, but also got the breaker, break of the channel. I am concerned about some fades, but overall it looks pretty good. Aroon got reset to bullish price action, and the RSI looks pretty good. Ethereum, a little disappointing. I would like this to break above 2400 first, if not 2500, for me to really care about it as much as I do other assets. It's not that it's bad per se, but Bitcoin and Solana look much better to me relative to ETH. It always has for a while now. Solana, looking good. I like the bounce here, but this is a bearish retest so far. Nothing significant. I want it to hold $100. I would like for it to reach up to 110 first. For me to really care much more about it. Part of that is because I bought so low at $20 roughly. So just keep that in mind. I don't think it's a good price point for people that have been in this. And a lot of people bought under 40. So just keep that in mind. So overall, that's the summary. Hope you enjoyed it. If you do, like, subscribe, check out the links in the description for the scripts and the premium videos, premium Discord, I should say. Let me know if you have any questions, comments. Let me hear it all. See you next time. Have a good day.